This strategy is not new globally. After the 1997 Asian financial crisis, the most affected countries embarked on aggressive foreign exchange reserve accumulation as a key policy response. This was driven largely by a desire for self-insurance against future sudden capital reversals and crises following the traumatic experience of relying on IMF bailout, which came with some strict conditionalities. Mr. Speaker, this helped these economies far much better during the later shocks like the 2008 global financial crisis without depleting their external reserves. Right Honorable Speaker, a diagnosis of Ghana's reserve trajectory shows a pattern of episodic accumulation linked to opportunistic external borrowing and seasonal cocoa outflows, followed by downturns, drawdowns to meet external obligations. The Speaker, clearly you could see from the chart below that over the years, Government of Ghana has been building reserves largely from Eurobond borrowings and borrowing from the IMF over the last few years. The Speaker, from a reserve position of 5.4 months of import cover in 2021, following an Eurobond issuance of $3 billion United States dollars, reserves sharply declined to a low of under 2.3 months of import cover in September 2023, thereby triggering the depreciation of our currency. The depreciation reflected a strain on external buffers in the face of constrained financial options, capital outflows, heightened macroeconomic pressures, and the need to meet critical foreign exchange obligations such as debt repayment. Right Honorable Speaker, global gold prices have reached unprecedented levels, driven by heightened international risk, sustained accumulation by central banks, and strong safe haven demand. These developments significantly boosted export earnings and strengthened external buffers for gold-producing economies, including Ghana. Mr. Speaker, with prices far exceeding their long-term historical averages, gold has emerged as the most reliable and immediate instrument for accelerating reserve accumulation without increasing public debt or introducing distortions in domestic market. Projections from major international financial institutions indicate that gold prices are likely to remain elevated and favorable over the medium term, underscoring the resilience and persistence of the current price cycle. Right Honorable Speaker, the outlook for gold prices provided a solid foundation for policies that strengthen external buffers, reduce vulnerability to external shock, and support long-term financial stability of Ghana. Harnessing this momentum will be essential to building a more robust and resilient reserve management framework capable of withstanding future global volatilities. The sustained elevation in global gold price presents a strategic opportunity for gold-producing countries to further enhance their reserve build-up framework, reinforce their external position, and enhance macroeconomic resilience. The Speaker, major gold-producing countries and central banks are capitalizing on historical high gold prices by increasing production, export, and official purchases to strengthen their external buffers. China, the world's largest producer of gold, continues to expand its domestic refinery capacity and use gold both as a key export and as a strategic reserve asset for diversification. Similarly, Mr. Speaker, Russia has leveraged on this elevated price environment to boost gold export revenues and channel part of the proceeds into reserve accumulation, using gold as a shock absorber against financial sanctions and global volatility. Mr. Speaker, Australia benefited from high prices through stronger export receipt, improved terms of trade, and higher fiscal and external surplus, which indirectly support reserve strength. Right, Honorable Speaker. Across these countries, elevated gold prices are being deliberately used to enhance the foreign exchange inflows, support balance of payment, resilience, and reinforce reserve position amid heightened global uncertainty. This current gold price surge presents a timely opportunity for Ghana to leverage the country's gold resources to accelerate reserve accumulation and reinforce long-term external resilience for our country. Right, Honorable Speaker. The primary objective of the Ghana National Reserve Accumulation Policy is to increase Ghana's international reserve to 15 months of import cover by the end of 2028 to support long-term structural transformation while safeguarding the macroeconomic stability. To achieve this, the following intermediate targets are set. First is to achieve a minimum of 8.6 months of import cover by end of this year, 2026. Second, to exceed 11.8 months by end of 2027. And third, to reach 15 months of import cover by end of 2028. Mr. Speaker, these milestones will be reviewed annually based on realized imports, prices, production volumes, and financing conditions. Right, Honorable Speaker, our gross international reserves at 5.7 months of import cover at the end of 2025, the gap to achieve the target of 15 months of import cover is 9.3 months of import cover. This implies an average annual accumulation of 3.1 months of import cover over the next 3 years. In 2025, Ghana accumulated additional gross international reserves of 1.6 months of import cover. This provides momentum for the country, but must be accelerated to achieve an average of 3.1 months of import cover in the shortest possible time. Mr. Speaker, to secure the target after netting out debt service, FX operations, energy sector payment, and statutory outflows, the strategy requires an average of 9.5 billion United States dollars annual additions to the country's gross international reserves. Mr. Speaker, to achieve this, the reserve accumulation target, the GANRAP has set an operational weekly gold purchase target of about 3 tons per week. At 3 tons per week and a price of $5,000 per ounce, gross receipts are projected at approximately 25.28 billion United States dollars annually. Mr. Speaker, Ghana's strategy for the acquisition of 3 tons of gold per week is in two folds. The first is the Ghana Gold Board to acquire up to 2.4 tons of gold per week from artisanal small-scale mining sector. Mr. Speaker, the Ministry of Finance will be making budgetary allocation to the Ghana Gold Board to achieve the objectives. The second, Mr. Speaker, the Ministry for Land and Natural Resources is to invoke the preemption right under Section 3D of the Ghana Gold Board Act 2025 Act 1140 and Section 7 of the Minerals and Mining Act 703 to purchase a minimum of 0.5 tons of gold per week from large-scale gold mines. Right, Honorable Speaker, the Bank of Ghana will purchase the gold acquired from large-scale mining sector. The gold purchased under Section 3D of the Gold Board Act and Section 7 of the Minerals and Mining Act 2006 shall only be sold by the Central Bank subject to prior approval of Cabinet and Parliament. Mr. Speaker, the following measures will be implemented in the short to medium term. Right, Honorable Speaker, measures on large-scale sector operations. A change in the current acquisition arrangement of the 20% large-scale gold output by the Bank of Ghana will be implemented in the short term. First, to ensure compliance by the large-scale mining companies government shall establish an interagency committee co-chaired by the minister responsible for lands and natural resources and the Minister of Finance, with membership from the governor, from the Bank of Ghana, and the chief executive of the Minerals Commission and the Ghana Gold Board. The Ministry of Lands and Natural Resources shall invoke the preemption right under Section 3D of the Ghana Gold Board Act to purchase a minimum of 20% of large-scale gold output, which translates to a minimum of 0.57 tons of gold per week. The gold acquired from the large-scale mining sector shall strictly be in the form of doré and processed in Ghana to promote local value addition. The transaction shall be in cedis only at the prevailing interbank exchange rate and at a discount to be determined by the parties. The applicable discount rate shall be determined based on volume between the government of Ghana and the large-scale mining companies. Right, Honorable Speaker, the gold purchased in doré under this new acquisition arrangement shall be refined by local gold refineries, shipped to LBMA refineries for melting, bar casting, and stamping, and added to the country's fiscal gold reserves. Mr. Speaker, this gold shall only be sold by the central bank, subject to prior approval of Cabinet and Parliament. Mr. Speaker, these measures will ensure strict enforcement of commitment by large-scale mining firms, local value retention, transparency, good governance, and acquisition cost reduction, while supporting local gold refineries to attain an LBMA certification and standards. Mr. Speaker, the Ghana Gold Board, as the national assayer, is strategically positioned to enforce this newly proposed acquisition arrangement as it maintains field officers in gold rooms of all large-scale mining firms and assays samples from large-scale gold output before export. Mr. Speaker, the Ghana Gold Board has successfully piloted this new acquisition arrangement with 9 large-scale mining firms in the last 6 months. Mr. Speaker, the Ghana Gold Board will put in place a strategy to efficiently mop adequate volumes of ASM gold output, minimum of 2.45 tons weekly, through official channels to generate adequate foreign exchange for the country. Over the next 3 years, the Ghana Gold Board aimed to mop up about 127 tons of ASM gold per annum. Mr. Speaker, to achieve this objective in an efficient manner, the following policy measures will be implemented in the artisanal small-scale mining sector. The first, Ghana Gold Board shall arrange enough funds to acquire about 3 to 4 weeks of gold and ensure continuous market participation. Mr. Speaker, the Ghana Gold Board will assume full responsibility for the signing of off-take arrangement and the sale of all ASM gold it procures effective from March 2026. This will ensure effective end-to-end trading with off-takers and mitigate trading losses whilst pursuing trading gains for the country. Right, Honorable Speaker, the Ghana Gold Board shall deploy effective gold-backed derivative trading programs and hedging strategies to mitigate market risk. Mr. Speaker, again, to disincentivize smuggling and ensure that adequate volumes of ASM gold are purchased, the Ghana Gold Board may employ price incentives through spot world market price purchases and bonuses for licensed miners. Mr. Speaker, in the medium term, the Ghana Gold Board will promote ASM formalization, value chain traceability, and local gold refinery to further reduce costs whilst maximizing return from gold export in a sustainable manner. The Bank of Ghana and the Ghana Gold Board shall sign an agreement which mandates Ghana Gold Board to sell all foreign exchange accrued under this policy to the Bank of Ghana only. Mr. Speaker, at a cost to be determined by the two parties. The Ghana Gold Board is also to facilitate the establishment of a modern LBMA compliant processing plant in partnership with private investors to optimize recovery, participation, particularly in the ASM sector, and promote sustainability. Special effort in the form of nationwide water body cleaning, cleansing campaign within designated mining areas will be undertaken by the Ghana Armed Forces. Mr. Speaker, the National Anti-Illegal Mining Operations Secretariat, NIMOS, shall intensify their activities against illegal mining, especially illegal mining activities in water bodies and forest reserves. Right, Honorable Speaker, the Ministry of Lands and Natural Resources and the Ghana Gold Board shall support and scale up sustainable initiatives such as the land reclamation. Mr. Speaker, government will deepen structural reforms that expand foreign exchange inflows whilst reducing persistent FX outflows. Key policy areas will include enhancement of non-traditional export, cocoa sector recovery, implementation of national policy on integrated oil palm development, remittance mobilization, developing new oil fields, Mr. Speaker, energy sector FS savings, all to ensure that we can actually save more forests. Right, Honorable Speaker, the implementation of gas to power transformation policy will also significantly conserve the country's foreign exchange reserve, making way for sustainable reserve accumulation. The gas to power policy measure include the construction of state-owned 1,200. Mr. Speaker, the gas to power policy measure include the construction of a state-owned 1,200 power plant, construction of a second gas processing plant, and revamping of oil and gas sector to attract investment into upstream petroleum sector. Right, Honorable Speaker, most importantly, maintaining fiscal discipline at primary surplus level is critical to slow down the pace of foreign exchange reserve depletion. Mr. Speaker, in the last 8 years, the Bank of Ghana has relied on swaps, sale and buybacks, and other short-term facilities to build reserves. This has been done at a very high cost. In 2002, 2003, 2004, the Bank of, in 2022, 2023, and 2024, the Bank of Ghana accumulated reserves of about $3 billion United States dollars, $2 billion United States dollars, and $650 million United States dollars, at a cost of $615 million United States dollars, $476 million United States dollars, and $67 million United States dollars respectively, through swaps and sale and buybacks. Mr. Speaker, in these years, from 2022 to 2024, the Bank of Ghana accumulated reserves of $5.65 billion United States dollars from swaps, sale and buybacks at a cost of $1.16 billion United States dollars in interest payment only. Right, Honorable Speaker, between 2022 to 2024, the Central Bank, Bank of Ghana, accumulated reserves of $5.65 billion United States dollars from swaps and sale and buybacks at a cost of $1.16 billion United States dollars in interest payment only. The Bank of Ghana also borrowed from international commercial banks such as JP Morgan, Standard Chartered Bank, and Citibank to the tune of $2 billion United States dollars between 2018 and 2021 at a cost of $182 billion United States dollars. In 2017 alone, government relied on inflows from the issuance of $2.25 billion United States dollars bond from Franklin Templeton to support reserve buildup. Mr. Speaker, the inflows of $2.25 billion United States dollars from Franklin Templeton to partake in the domestic bond issuance of early 2017 cost the nation about 7.3 billion Ghana cedis in interest payment alone between 2017 and 2022. Mr. Speaker, between 2018 and 2021, Ghana again relied heavily on external borrowings to support reserve buildup. A total of $11 billion and 25 million United States dollars was borrowed through Eurobonds by government from the Eurobond market during the period. This came at a very high cost, ranging from 7.6% and 9.6% per annum. Mr. Speaker, the issuance of the 11 billion euro bonds from 2018 to 2021 to support reserve build-up costed Ghana the following. In 2018, it costed Ghana 81.26 billion United States dollars. In 2019, it costed us 287.58 million United States dollars. In 2020, Ghana had to pay interest only 524.6 million United States dollars. In 2021, Ghana had to pay 740.77 million United States dollars. Mr. Speaker, and in 2022, the country had to pay in interest only 844.83 million United States dollars. In total, Mr. Speaker, Eurobond borrowed between 2018 and 2021 to support reserve build-up costed the taxpayer about 2.5 billion United States dollars in interest payment alone. Right, Honorable Speaker, it should be noted that Ghana is still servicing this debt following the end 2022 debt default. Mr. Speaker, in 2026 alone, Ghana is required to pay 1.5 billion United States dollars in debt servicing due to this Eurobond debt. The Speaker, at the peak of the 2022 economic crisis, Ghana lost access to the international capital market and was in dire need of foreign exchange. Government of Ghana once again resorted to expensive borrowing of 200 million euros, $196.58 million and 350 million euros from the Afrexim Bank at an all-in cost of 6.49% and 9.5%. and 9.33% per annum respectively to support. Evidently, all these borrowings from 2017 to 2022 were not enough to stabilize the Ghana cedis, leading to depletion of the reserves to unprecedented levels and significant depreciation of the currency. Mr. Speaker, evidently, borrowings from 2017 to 2022 were not enough to stabilize the Ghana cedi, leading to the depletion of the reserves to unprecedented levels and the significant depreciation of the Ghana cedi. It is obvious that borrowing to support reserve accumulation is unsustainable and leads to high debt distress and debt overhang. Mr. Speaker, between 2017 and 2024, the Bank of Ghana and the Ministry of Finance collectively borrowed to the tune of 21.7 billion United States dollars to support reserve build-up at an interest cost of 3.84 billion United States dollars and 7.3 billion Ghana cedis through Franklin Templeton interest payment. Mr. Speaker, if government of Ghana had borrowed 10 billion at the 2025 yield of 8%, the cost to the nation would have been 800 million United States dollars in just 1 year. Mr. Speaker, the cost of accumulation reserves through Ghana Gold Board in the year 2025 was significantly lower than the cost of Ghana's 2022-2023 swaps and sale and buybacks. Mr. Speaker, the evidence is so clear. Right, Honorable Speaker. In addition to the comparable lower costs of the Ghana Gold Board model, the activities of the Ghana Gold Board have been instrumental in restoring macroeconomic stability in Ghana. Right, Honorable Speaker, in 2025, some of the benefits include the following: significant international reserve accumulation, historic appreciation of the Ghana cedi, significant reduction in inflation, significant improvement in debt sustainability, and significant savings in the servicing of government external obligation, interest costs, amortization, payment, and IPP costs. Right, Honorable Speaker, these macroeconomic gains have delivered meaningful relief to households and businesses through the reduction in fuel prices, food prices, cost of doing business, and cost of living. Mr. Speaker, government will adopt proactive approach to risk management under the Ghana Accelerated National Reserve Accumulation Policy. Price risk will be mitigated through hedging mechanism and complemented by other trading models. Production risk will be addressed by modernizing mining, processing technology, and diversifying production site. Mr. Speaker, governance risk will be mitigated through independent audits and enhanced transparency. Environmental and social risk will be addressed through intensified enforcement of anti-illegal mining laws, targeted reclamation, alternative livelihood programs, and community engagement programs. Right Honorable Speaker, this structured approach aims to transform mining from a volatile revenue source into a stable, transparent, socially and environmentally responsible pillar for macroeconomic stability. In conclusion, Mr. Speaker, this reserve accumulation policy provides a clear, actionable, and forward-looking framework to enhance Ghana's external resilience. Ghana is positioned to achieve and sustain reserve equivalent to 15 months of import cover by end 2028. Mr. Speaker, this will be the first time ever in the history of Ghana. Mr. Speaker, for emphasis, Osajifo Dr. Kwame Nkrumah inherited reserves of 11 months of import cover. We strive to achieve 15 months of import cover by 2028. Mr. Speaker, government remains committed to executing this policy with discipline, transparency, and national consensus. The long-term objective is clear: build an economic war chest to withstand global economic shocks, to secure macroeconomic stability, sustain the economic gains made, improve the standard of living of Ghanaians, and build lasting national prosperity for our future generation. Right Honorable Speaker, on this historic occasion, I call on this August House to consider and approve Ghana's first national policy deliberately designed to build external reserves and secure the future of our country. Mr. Speaker, I so submit.
Honorable members, we've listened to the statement by the Minister of Finance, but the statement has gone beyond the ambit of statement. It ended by calling on the House to consider and approve Ghana's first national policy deliberately designed to build external reserves and secure the future of our country. If we have to approve, then it has to be a motion. And so the statement has been made. I will take some comments, but I will have to refer it to the appropriate committee, that is the Finance Committee, to come by way of a motion which will be debated, and then we can give our approval. Usually, we don't give approval to statements. We make comments. But these are matters that members may want to make inputs. And so it goes beyond that. You have to make inputs and you have to give your verdict by approving or disapproving. And that means that it has to come by motion. So today we'll take a few comments, and in consultation with leaders, it has been decided that we'll take 4 from each side of the House, 3 members and 1 leader per side of the House. And since the Minister for Finance is coming from the majority side, and he has presented the statement, we'll take the first comments from the minority side. And therefore, the list that has been given to me, if I'm to go by it, according to precedents, it will be Honorable Dr. Gideon Boakun, and I'm told you are limited to 5 minutes commentary. 5 minutes, Doctor. The 5 minutes starts from now.
Thank you, Right Honourable Speaker, for the opportunity granted me to comment on the statement made by the Finance Minister on the Ghana Accelerated National Reserve Accumulation Policy. Mr. Speaker, I've listened to the Minister and as you referred to the Finance Committee, will wait until then. But before then, I wish to make these preliminary comments. Listening to the Finance Minister, it is important that we agree that Ghana, where we have gotten to, need to accumulate enough reserves to anchor our currency and protect safeguards for the economy. Mr. Speaker, the Finance Minister has stated that this is the first time Ghana is having such a bold policy. I wish to differ in opinion that this whole policy hinges on gold, and it is important that we stress that the policy to accumulate gold to shore up our currency and provide other benefits to the economy is not the first time we are having such a policy. In fact, as the Minister is aware, somewhere in 2021-2022, the Bank of Ghana embarked on the Domestic Gold Purchase Program and the Gold for Reserves Program under the leadership of the former Vice President, Dr. Mahamudu Bawumia. It is this policy that has anchored our currency till today. It is important that today this government has realized the need to increase our gold reserves and therefore is coming to Parliament with this policy. This is how we should govern. And Mr. Speaker, I wish to state that I would have loved that when it came to the point of having cocoa haircuts for cocoa farmers, the same policy should have come to Parliament for us to debate on, as the Minister is doing today. Mr. Speaker, it is an undeniable fact that Ghana holds a strategic position in gold production in the world and Africa. Despite this, the level of Ghana's gold holdings is quite anemic relative to the total holdings institute. And therefore, it is important that as a country, we make steps to accumulate more gold. Mr. Speaker, if this is the position of government, and rightly so as presented by the Finance Minister, I begs the question, why this government decided to sell portions of the gold that they inherited as accumulated for this country. Mr. Speaker, before the assumption of this government, we had increased Ghana's gold reserves from 8 tons to 32 tons, and the government came to increase it to 38 tons. But today, as we speak, half of our gold reserves has been sold by this government. If the policy intention of government is to accumulate more gold to support the economy, why did the government decide to sell gold that was already existing before they came into power? I heard the argument that we needed to sell that gold because we needed liquidity in forex. Yes, it is important that foreign exchange provides liquidity for the economy, but gold reserves also provides monetary solidity and market confidence. We need both as a country in order to thrive in the globally changing economic system. And that is why we from the minority side, we support any attempt by government to shore up our currency, to shore up our economy with gold reserves. But Mr. Speaker, it is important. What is missing from the Minister's presentation is the lack of clarity as to whether or not we are moving 100% to gold reserves, or we are moving 100% to foreign exchange reserves, or we are having a balancing mix. It is important that we manage our gold accumulation within a certain composition mix ratio, such that we have enough foreign exchange in terms of fiat money for liquidity and also have gold. It is not clear from the Minister's policy presentation whether or not we are moving straightly to 100% accumulation of gold or 100% accumulation of FS reserves, or we are having a balancing of the two. Gold reserves is not the same as foreign exchange reserves, although gold reserves can be liquidated to get foreign exchange. So we need to have clarity on that. It is also important to know from the Minister's presentation, and that is lacking, how we are going to finance the purchases of this gold. Gold Board came into being by changing the name from PMC to Gold Board with an act. The Minister had told this Parliament the government of Ghana was going to finance Gold Board. We never saw any action in that regard, although there were budgetary provisions for that. The Minister never acted on that, only to realize that the Bank of Ghana was rather pumping money to support Gold Board. But Mr. Speaker, the Minister talks about the achievement that has been made in the foreign exchange market by way of the stability of the cedi. That is fantastic. But it is important for the minister to note that it does not make economic sense to pump over $10 billion in cedi foreign exchange intervention and only reduce the rate from 14 to about 11 to 12, when in the past, under the previous government, the rate was reduced from 16 to 14 without a $10 billion intervention in the economy.
Honorable member, your time is up.
Thank you, Mr. Speaker, for the opportunity.
Yes, thank you so much. Thank you. You've done very well with your comments. We'll move on to the other side and we'll listen to Honorable Isaac Adungo. Please, 5 minutes from now.
Thank you very much, Mr. Speaker. Mr. Speaker,
Honorable members,
want to
Deputy
thank
Speaker
the
to take
Minister
the
for
chair.
Finance.
Sorry, I've taken one of your minutes.
His Excellency.
First Deputy Speaker to take the chair. So your 1 minute starts from now. Your 5 minutes starts from now.